All right, we're good now. All right, trade pros. In today's morning market update, we're going to talk about a Hurricane Michael, who is now barreling down into the coast. It's expected to hit by Wednesday at 8 a.m. I'll tell you why that's important. We're also going to talk about these 10-year Treasury yields and the significance they have on the market. And we're going to get started with trading. So in today's morning market update, let's start by going through and taking a little tour of the world. In Asia, Japan's down 1.3%, Hong Kong's down 1/10 of a percentage point, China's up 0.2, and India is down 0.5%. So we're seeing some broad market sell-off. Japan being hit the hardest in the Asian sector and the Asian session. In Europe at midday, London's down 0.3, Paris is down 0.4, Frankfurt's also down 0.5 or 0.5%. So you're seeing a sell-off also in the European markets. This is now the fourth day of downside in equities. And we're seeing a sell-off, and it's not the type of selling that you say, oh, I'm just going to buy it and it's going to recover. You're seeing selling on heavy volume. So it's starting to look concerning. It could be the beginning of a new lower wave and in a more dramatic fashion. I read a report the other day that a lot of ETFs and a lot of these automated trading strategies are losing 2 to 3 times more to every single dollar that the actual underlying asset moves, which means there's a lot of leverage. And these aren't triple funds, these are one-to-one funds, which means there's a lot of leverage in the industry. And whenever we start to shake buyers out of a trade, it's a lot more dramatic than getting buyers into a trade. Every trader knows it's easier to accumulate a big, sizable long position, and it's 30 times harder, just arbitrary stat. It's a lot harder to unwind that trade because you got to find buyers. And whenever a market's selling off, it's tough to find buyers, and that's what leads for it to drop vertically. All right, they say stocks take the escalator, or rather they take the stairs up and the elevator down. Remember that always. Futures in the United States, Dow's down 0.5%, S&P's down 0.5%, Nasdaq's down 0.5%. Technology stocks getting battered here over the last couple of days. FANG stocks, the darling of a lot of the hedge fund and institutional money industry, they're getting hit the hardest. All right, so keep an eye out on that in our market analysis live report this weekend on Sunday that goes out to subscribers. It was live. It's a live report every Sunday. We get together, do a webinar, and it's worth the entire subscription alone. And that's just one of many things we offer. In that, we talked about look for the downside this week, especially if FANG stocks continue lower, and they have. So you got to be on the short side, selling rallies. Today, we could have a little bit of a buy stop run, but I do see more downside coming up in this market. All right, crude oil is up 0.7%, gold's up 0.1%, but still hanging around the 1190 level, far below 1200, and Bitcoin is hanging around mid 6,000s. All right, the 10-year Treasury yield's up 3 basis points again, the 3.26. That's a problem. We'll talk about why. 10 a.m. we have Fed's Evans speaking. He's going to have a speech, and Fed's Williams is speaking on monetary policy tonight at 9:15 p.m. So we have a couple Fed speakers as well to throw into the mix. All right, so what is this phenomenon going on with Treasuries? Well, Treasury prices are followed mainly on the 10-year yield. It's sort of in the middle of the curve. All right, you have a 2-year, 5-year, 10, 30-year, which creates what we call the yield curve. What's happening here is that the front end of the curve is rising more exponentially than the back end of the curve. And recently, the last couple of days, that hasn't been the case, but over the longer haul trend, we're noticing short-term interest rates creeping up while the longer-term interest rates are lower. All right, and the 10-year Treasury is now up to 3.26%. That's an increase of 80 basis points, all right, or 0.8% since the start of 2018. That's a huge increase. And that's starting to put pressure on businesses, all right? Companies are able to, they were able to fundraise money much cheaper. Now they have to pay more interest out as that yield rate goes up. Everything's going up. The Fed's hiking rates, mortgage rates are starting to go up, all right? Car loan rates are starting to go up. I'm seeing a report this morning that a lot of the auto industry 0% finance to attract clients is being shed. There's very few companies that now offer that as of the last Fed rate hike, and it's putting a lot of pressure on the economy. So the Federal Reserve, when they hike rates, that's their intent. Their intent is to slow down the economy, and you're seeing things here starting to line up to look like the 1987 Black Monday crash. I'm not saying it's going to happen now, but that's what happened then, all right? Rate hikes, and the yield soared, and stocks took a bloodbath in response. Stocks sell off when bond yields go up, all right? Puts pressure on the economy. Now, bonds are down. And at some point, bonds are going to start to get inflows of stock capital. Not yet. The yield needs to get to 5%. The magic marker is 5% of the 10-year yield for stocks to become more cheaper in terms of risk than the bonds. And so we got a long ways to go for that 5%. And then what's going to happen is that could reverse. However, watch that 10-year yield. Follow it very closely at 3.26%. I'm going to be watching that today like a hawk. It was closed yesterday for Columbus Day holiday. Treasury markets are now open today, and all traders are going to be watching them, including myself. I'll be following and tracking that 10-year yield in our trading room very closely, and I'll be giving frequent updates. All right, guys. There's 230 billion of U.S. Treasuries going up for auction this week. Fixed income traders will probably already know that. If you don't, now you do. And there's going to be a lot of opportunity in the fixed income markets. With $230 billion worth of Treasury auctions, it's very important to see the coverage that they get, the bid to offer ratios, and to see how much demand there is for these new treasuries now that they've sold off so much. As yields go up, treasury prices actually drop. So we got a big week ahead of us. We continue to have a big week ahead of us on the treasury market and on bond yields. All attention and focus is shifting there. Traders, institutional managers, hedge funds, and the people who are least likely to look at that market are retail traders, but they're the ones that need to look at it the most for their day trades. So hone into those, watch them. If you don't know how to do that, you can go on tradingview.com. There's a free ticker that helps you track the yields. It's US, all right, 10Y for yield. US 10Y. That's the 10-year yield. It plots it. You could put it on a comparison chart to your stock market, whatever you trade. If you trade NASDAQ, put it overlay it on top of your NASDAQ chart. If you're trading oil, overlay it on your oil chart. Whatever you're trading, overlay it on top of that and watch what power that yield has, because there's so much attention on it. The more attention on it from traders, the more correlatory power it has, an advantage it gives you. All right. All right, that's kind of what we're looking at right now. The yields are very important. They're front line and center. Next thing I want to talk about today is the hurricane stocks. We're on watch again as Hurricane Michael is heading into the Gulf of Mexico. It's looking like it's going to hit closer to Florida, a little bit east. So refineries so far are safe. There's no expected significant damage to refinery operations. Some of them may reduce output or shut down temporarily in case of the storm veering off and headed towards that side of the coast. It's not going to happen though. All predictions are saying this thing's going to bend to the east side and make its way through that way. So oil so far today, there's a little bit of upside. Not sure it's going to be impacted for the longer term through this hurricane. However, this hurricane's building to be very strong. It started out as a tropical storm. It was upgraded to a hurricane and continues to pick up momentum as it heads towards the coast. And countries, or cities rather, and towns that are affected: Florida, Alabama, Georgia, South Carolina, North Carolina, Virginia, Maryland, New Jersey, and Delaware are going to be in line, and it's going to see some precipitation. They're saying there could be a storm surge of up to 12 feet. All right. The storm surge is the water. So you guys know when a hurricane starts to build, obviously it sucks up and mops up the water around it, and it brings it to the coast. And that elevated water level is what ends up causing most of the damage. It's not the winds typically. It's usually that water surge that causes a ton of damage. Insurance companies having one heck of a year, man. A lot of these hurricanes have hit the coast, caused significant damage. So here we go. It's upgraded to a hurricane. It's expected to hit landfall 8 in the morning tomorrow. Look for oil. It could have some knee-jerk reactions, and we're going to be trading and watching oil very closely in today's morning market update. The National Hurricane Center issued warnings and evacuation orders for some of these cities. And hold on. Bond market catching a bid. Just hearing a squawk. All right, bond. Did you guys hear that? It's so important. I'm telling you that the squawk guy started talking about it. The market's not even open yet. He's saying bond yields have pulled back a bit and bond prices are recovering, which means we could get a little bit of a buy stop run early on. So here's how I'm going to tell you how to trade this market. We'll call it a day. Early on in today's session, I'm seeing a buy stop run to the upside on equities. I'm seeing a lot of short sellers stuck near the lows, and we've had a fourth consecutive day of downside. At some point, we're going to have to take out some of these eager and late shorts to the party. And when we do take them out, it's going to reverse and head back down. So early morning, I'm actually looking for some bullish price action on equities right off the open. We might have a head fake lower on the open, then reverse sharply higher, sort of like yesterday. And then late morning to mid-afternoon, we turn back down and start hammering these markets. Look out. Today's not going to be an easy day to trade. I got to warn you guys. Today will probably be a bit of a more difficult day to trade because you're heading into a low over multiple days. And the question is, at what point do we pop some buy stops? It's becoming too much too soon. And despite the fact I still see more downside, we're going to have to take some long trades here early on until momentum breaks a new low. Once we get a new low, start hitting bids, ride this thing lower. You're going to get a nice move to the downside. All right, that's what we're going to trade. I want to wish you guys a great day. All our Canadian friends, welcome back from Thanksgiving. And we have a great week ahead of us of trading starting today. I see a lot of opportunity and volatility coming up in today's session. Have yourself a great day. Manage your risk. Trade like a trade pro. See you tomorrow morning at 9 a.m. Take care and goodbye, guys. All right, trade pros in the room. As you guys can see here, the chart I'm showing in our room is oil. Let me switch to equities and let's map out some levels. And then we'll get Victoria to talk about NASDAQ and Stephen will do the oil market. Stephen's our oil desk. And then across those three assets, we're going to have a whirlwind of opportunity today. And I expect everybody to have a good chance to do really well. All right, so let's get started. Let's map out some levels and trade ideas for today's session.